Good afternoon. Thanks for being here. Last session of the last day. So we are going to talk about consolidations. Yay, right? Everyone get excited. I'm April Olson. You've probably seen me present before. I'm program manager with Christy from our Fargo office. So have a focus on financial reporting, general ledger, consolidations, currency dimensions, some of the fun financials. Today we're going to talk about consolidations in Dynamics 365 for operations. I'm going to touch a little bit on currency translation as well. And the majority of our day is just going to be focused on consolidating your way, soft versus hard, and not giving you a recommendation, but having you walk away with understanding what options you have so that you can create the right solution for your company or for your customer, depending on if you are a partner or customer. So the whole session is going to be based on this very busy slide. And what this slide does is cover some of the very different consolidation scenarios that we hear, and it covers about what you can do to solve those using Dynamics 365 for operations. So for example, do you need to include eliminations? With that, you can use our Consolidate online, and you can include eliminations to get that really hard posted elimination. We'll show you how you can do a soft consolidation with financial reporting, and we'll show you how to do the eliminations in a column or a row. Of course, you can have a company and post to them. So there's so many different options you have. So I'm going to cover each of these quickly on this slide. If you have multiple currencies, we have the ability to have unlimited reporting currencies with financial reporting. When you use the Dynamics 365 for operations Consolidate online, you only get that one reporting currency with that option. So I'll talk a little bit about some of that as I step through it. If you want to see transaction level detail for each company, that's where financial reporting and that soft consolidation will allow you to drill down and see the transaction level across all your different companies, whereas using the consolidation in operations allows you just to do the daily balances by day. Did anybody go to the budget planning session or budgeting session today? Okay, if you want to bring all that data in across different companies, then you'll need to use financial reporting, because budget planning, you can only consolidate or get your cross-company view of it using financial reporting. With multiple chart of accounts, you actually have two options. You can use the Consolidate online. I'm going to show you today the consolidation account groups, so I'll showcase some of those. You also can do the same type of consolidation using financial reporting, so I'm going to show you that too. So what you're kind of seeing in this theme is you have options, and we're not going to say only use this one or only use that one. We want you to kind of use a combination both of whatever will reach your needs. We have customers using both very successfully, so it's not about one or the other. It's not about a hard recommendation, but choosing your solution and making it work for you. If you have multiple levels of consolidation, and what I mean by this is not a hierarchy, but I maybe need to consolidate Great British pounds to euros, and then I need to go from that translated euros to US dollars. Then you're going to have to do those multiple levels of consolidation within operations, the Consolidate online, because the financial reporting just goes from the accounting currency straight up to the reporting, so it's not going to do that multiple level. If you do have data in a non-Dynamics ERP, you will need to do the export and import piece of operations. So it's called Consolidate with Import, and that just allows you to bring in a file, and it will consolidate to our consolidation company on import. Ownership percentages, I'll actually show you this today, but you have two options to do financial reporting or the Consolidate online for ownership. Business unit consolidation, so that would be, I want to see all my auto division across 10 different companies. Those types of reports you will need to do in the financial reporting. And then if you have more than one instance of operations, so I'm not sure if anybody has that yet, but if you do, we have the export company balances and import, so you can do that part. So hopefully this covers on a lot of the different scenarios, so I'll demo most of these today, but This slide has this, or we'll repeat it at the end. It's kind of for something for you to take home and reference here all the different options that you have. So let's get started. The first thing I'm going to do is I'm going to walk through the consolidation process in operations and talk about its capabilities. So we're going to spend a lot of time jumping back and forth here between slides as we kind of call out each of these scenarios today. All right, so in operations, there is a company that you actually specify as a consolidation company. And when you define a legal entity, you'll notice I'm in this company called GLMF. And when I go to the legal entities, you will see that there is this toggle that says use for financial consolidation process. And it's set to yes. So you have to actually define a consolidation company. That same company can be used for eliminations as well, but you can have a separate company for eliminations. Okay, so I have both of them set to yes for the demo today, but I could certainly have a separate company, which we see a lot of customers do. They'll create one called like Elim for eliminations, and they'll have all their eliminations in that company. Just lets them isolate it easily for reporting, and just their way that they like to manage it. So that's the first step, is I do need to have use for the financial consolidation process. So I've created this company. I've got the ledger set up. And what I'm going to step through today is we're going to do a very basic example just to showcase the capabilities. I've got two companies that I want to consolidate. And what I want to do is use the Consolidate Online feature. Now, if they were to have separate chart of accounts, how would I handle that scenario and still do that hard consolidation? All right, I'm in the general ledger area. Oh, I'm sorry, consolidations. And you'll notice that we now we've basically taken consolidations and put it in its own module area. So that's really easy to kind of step through the process instead of trying to hunt through the general ledger and find what you're looking for. So you can complete everything that you want right from this short menu item. And you'll notice that under the setup, we have consolidation account groups and a consolidation accounts. So if you want to use a hard consolidation and you have separate chart of accounts, or maybe you just need to have a statutory chart of accounts, you can create what's called a consolidation account group. And I'm just going to create a new one called French, and I'm going to call it my French statutory chart of accounts. Maybe I need to consolidate to that level. I cannot spell. Okay, so that's a pretty simple form. All I've done is I'm creating a new group. That's about all I'm doing there. The work really comes in the consolidation accounts. When I go to the additional consolidation accounts, again, I have this chart of accounts right now. I'm using a standard one. I'm going to go ahead and click New, and I'm going to say that anytime I consolidate main account 110110, which is my cash account, okay, when I am consolidating using my French statutory chart of accounts, the account that I want to consolidate to, we're just going to use a simple 1000. Okay? And you would go ahead, and then I would give it a name. And you would go ahead and you would define these consolidation accounts for each one of those different chart of accounts you need to consolidate to. And again, you can, just like you've probably seen all week, you can do this easily with an Excel upload, so you don't have to manually type this in. You can upload this right through Excel. And you would define each one of these mappings in this consolidation accounts. So that's just kind of the basic setup. Okay? So it's kind of a mapping exercise is really what it is. There is, yes. There is. Great question. The question was, is there a consolidation account on the chart of accounts? Yes, I can show that to you. This is on 2012, yes. Yep. There's also let me put this into edit mode. There is a consolidation account as well on your main account. Okay, so you could also, if you just had one chart of accounts that you need to consolidate to, just one different one, you could also just set it up there. The additional groups are when you have multiple layers of them. You know, again, you might have one for French, you might have another country you need to consolidate to, or a different type of chart of accounts. So it just gives you multiple options or one. So you can use it on the main account, or you can use it in the group. Okay. I'm sorry?
What happens if you have this configuration also on the account? And
Great question. So what happens if you have it on the account? I'm going to show you all that when we get to the form. Yeah. All right, so when you've marked a consolidation, you've got your account set up. Yep, good call on either the main account or the groups. I'm going to go to the consolidations, and we're going to go to the Consolidate Online. So this is the Consolidate Online form, and you'll notice there's different tabs going across the top, and I'm going to step through what each tab does. So the first is you need to give it a description. So I recommend doing something that's familiar. You might process the consolidation more than once, so you might want to name it with a month name and the year name, or come up with just a really good naming convention for when you want to process it. So I'm going to run it for March of 2017, so that's when I'm going to name it. The main account section allows you to define what main accounts that you want to consolidate. If I leave the from and the to empty, it's going to select all accounts. Okay, but maybe I just want to consolidate my P&L accounts or a range of them. You can choose a range, but by default, leaving it empty will bring over every account that has data. So back to your question here. Here's the use consolidation account. And if I choose use consolidation account, you'll notice there's a drop-down enabled. Okay? If I choose main account, it's going to pick the account from that main account setup. If I choose consolidation account group, this is where you'll see that French, German, and SAT one, where I can pick that, and that's going to use the mapping, and it's going to take the source and map it to that consolidation account. Okay? So you can either turn that toggle off, or you can go ahead and select it. Okay. The consolidation period is the period that you're going to consolidate. So I picked the entire month of March, so the 1st through the 31st. But you can choose whatever date range you want to consolidate. Over here we have 3 options. Include actual amounts. So you want to probably turn that one on to yes. For some reason, it by default is on to no. So we have had people run it and say, I'm not getting data. But that'll consolidate your actual data. If you do want to consolidate budget amounts, you can turn this one on to yes. Again, this doesn't do budget planning. It just does the budget model. So anything that you see in that budget register. So if you have budget models, you could then pick what those budgets are. But for budget planning, again, as I mentioned, you still have to do financial reporting. The read build balances during consolidation. If you turn this to yes when it's processing, it's going to run those balances. I don't know if it's a best practice or not. I think a lot of people schedule those separately because it can add to the processing time. I think that's kind of a call you have to make depending on how many balances you have to recalculate. But that can add length to the time. So you can turn that one on, yes or no. And then again, if you do the budgeting, this is where you would choose your budgets. So that's just kind of the general information about the consolidate. And then you have to step through each one of the tabs. Will it bring the opening balance into the consolidation? I'm pretty sure, I have to remember, I'm pretty sure that you still have to run the year-end close process to generate those opening balances in the consolidation company so that you truly get that based on the consolidated versus just trying to bring together and add opening balances. So for the financial dimensions, these are all the financial dimensions defined across all my different companies or in the system. You can see there's a lot of them in our demo data. Probably most customers have anywhere from 3 to 11, give or take. And you don't have to include every financial dimension. You know, a lot of companies transact at a more granular level, but when they consolidate, whether it's in operations or another tool, you know, it's done at a much higher level, maybe business unit and department. And so this is where you pick the dimensions that you want to consolidate. So you'll notice in this middle column called specification, today I'm going to do business unit, department, cost center, my company, and I believe I did trading partner as well. And once you choose dimension as the option, you have to give it a segment order so that it knows what order to bring it across into the dimensions. So business unit 1, department 2, cost center 3. So you actually have to give them a sequential numbering, and that's just how everything, again, is going to get mapped, transformed, and into the consolidation company. Great question. So if you have a dimension value that's based on another entity, do you have to create those? You do not. They come across but they come across, there is some special handling that happens. Yeah. So they don't come across populated as the same way as they would in a transactional company. So the legal entities, this is where you define your legal entities. So you can have 1, you can have 100, but you'll define them once. And everything you set up here will be remembered the next time you go into this form. So if you do have 80 companies, it might be a small painful experience at first, but it will remember them. Thank goodness. But you'll have your list of legal entities here that you can pick and choose. I'm going to keep it very simple for this demo. I'm just doing 2 different companies that I created that I'm going to bring together. You can define a percentage here if you'd like. If it's not 100% owned, you can do a percentage in there and just type that in. So if you had like 80%, it would consolidate 80% of the balance. Now the elimination, I'm actually going to cover this right after. I'm going to cover the setup of the elimination rule and the processing of the proposal. I'm going to do it as a separate step. You can do eliminations 2 different ways. If you do our elimination rules, you can process them as part of the consolidation. So when it's doing all its aggregation, it'll actually process the rules as well, and it'll give you that journal for you to review. Or you can actually just run the process after, which I've heard a lot of customers prefer it that way, but again, it's a user preference is what it is. If you do decide to run it during this step, you have 2 options. You have to do a proposal only, which again will create that journal. You'll be able to review it and post it. Or you can have that one step. It will actually create the elimination proposal and post it in a single step. Again, I'm going to do it after just so I can kind of show you that setup. And then we have the currency translation tab. So now I'm not actually consolidating my DEMF company, but I kept it in here right now for illustration purposes. If you have different accounting currencies, this is where you set up the translation that's going to happen during the consolidation process. And there are differences that happen during this process than the financial reporting, so I'm going to try to cover those both today. When you are setting up this currency translation tab, you have to select that source legal entity, and then that source accounting currency will default. So let me just go ahead and choose BRMF. You'll notice that the Brazilian real is what defaults. So it actually defaults that source currency in that form. Then you have to choose your account range. I'm just going to delete that. Because not every account in your system is translated at the same rate. So in this example, any account from my cash through my 16,999 accounts, you'll notice down here is going to use a specific rate type. And it's going to use the consolidation date to pull that rate. And based on the consolidation date, it's showing me that the rate that it's going to use is 133.33. Okay? So in this case, that one's using more of that spot or month-end rate. In this example, my 17015 accounts through my 19,000 accounts, you'll notice I'm using transaction date. These are my fixed asset accounts. So I needed to go back to every single transaction date to get the exchange rate. So that range of accounts is going to use a different exchange rate. based on its transaction date during the processing. All right, these are my liability accounts through my equity accounts. I'm using that end rate. And then my P&L accounts on this range right here, my 4 through my 8s, I chose to use the consolidation date. I could also do a user-defined rate. Maybe I'm saying, you know what, I've done the average and I want that rate to be, 130.05. So you can also use a user-defined rate. Okay? And that's kind of the extent of the translation during the Consolidate Online. Okay, what it's going to do is it's going to take those range of accounts and those balances based on those rules, translate it to the accounting currency of the consolidation company. These accounts right here, these should be the accounts, I believe, from the, we got this question once. And it was opposite of what we thought. So whatever I say, I feel it's going to be wrong. And I'm using the same chart of accounts, so I can't, let me add, you know what, I can tell you, let me add the Brazilian company back in. Great question. They are the accounts from the source company. Yeah, because this is the Brazilian chart of accounts. So. All right, so when you're done, you click OK. I've already processed this due to time. It will process, it will bring in those balances by day, and you'll actually be able to see those in what's called the consolidation transaction. So I ran this last night just because it took a little bit during the demo, and I only have like 4 transactions for my new company because I wanted it to be kind of quick, but these are the 2 companies that I chose to consolidate, and I can go ahead and I can look at those transactions by my actual or by my budget. Or I guess there's like 6 lines. And these are the 6 transactions that consolidated. And you can see here are the different dimensions that came across based on that order. Okay. So you can run this consolidation process as frequently as you want. You can run it again for March, but you can also delete the transactions and redo it as well. So if I wanted to reprocess this, I could do remove transactions and rerun it. At this point, this company, this GLMF company, is just another legal entity. You can still do the trial balance. You can still use it in financial reporting to report off of it. It's only specialized, and I can't actually post general journals to it and do some other things. But as far as everything else, you can still run your reports and everything from your ledger off of it. Now, I chose not to run that elimination proposal during the process because I did want to just show you how you can do it as a separate process. Now, in all transparency, we know that we are lacking a little bit on eliminations for anyone that's tried to do it. We know there's a lot of feature requests around it, so we're usually pretty transparent about what it does really well and where it lacks. And sometimes when you get into a lot of multi-currency, they can be a bit painful. So we are fully aware that it's a top consolidation feature request, and we would definitely like to address it in the future. So I'll probably save that question because we know it's painful. So let's first go through the elimination rule setup. Now, you can set up your eliminations a lot of different ways. I'm going to say that the 2 most common ways we see customers do it are they create a dimension called like trading partner or intercompany partner, and they actually use that dimension when they're doing their transactions because it really makes eliminations very, very easy. The other thing is we've actually seen customers just create an elimination company, and instead of actually marketing it as an elimination company, they actually just post transactions to that company for their eliminations for really good auditing purposes. So again, they usually work with their partner, their auditors, and they kind of come up with a solution that works best for them. But those are probably the 2 most common ways that we see customers do eliminations with operations. All right, so I just created a real basic intercompany rule here. And I'll just create another one here, just for the purpose of it. And my destination company is where this journal is going to post to. Yes? Yep, great question. Let me just delete it. So he asked if I could explain a little bit more about the trading partner. What we often see, I'll just jump to the general ledger here, if they don't create a separate company, is they will create a financial dimension. For example, I created one already, but I'll just call this one, you can either use a custom dimension, or you can actually back it by legal entities, which is what I did for this demo. So I created a dimension backed by legal entities, and I called it trading partner. I'll just call it intercompany partner for this one. And then they add that dimension to like an account structure, and whenever they use an intercompany account, they can make it mandatory to track who they're trading with. And it just really allows for easy reporting. So that's how they're using an intercompany dimension. They create one, they build it into their account structure or rule, and then they track that on their entry to make for elimination. So that's kind of how we've seen a lot of customers do it. All right, let me go ahead and delete this. So I already had one called Trading Partner that I've posted some transactions kind of following that process. All right, so let me go back to creating a new one here. I'll just mimic what I've already done. So the first thing is the destination company. So this does need to be, if you're going to run the elimination proposal, where that data has been consolidated to, because we can't go across the companies to get it. It actually has to already be aggregated and consolidated. So this, in my example, will be this GLMF company, because that's where I ran the consolidation process. So I choose that company. You can make it effective. You know, maybe you're setting one up for the future, so you can set an effective date of the elimination if you'd like, and you can also have one expire. So maybe it's just something you're doing temporarily. You can have it expire maybe at the end of a quarter, at the end of a year. You do need to set it to active if you want it to be available for selection in the proposal, and you have to choose a journal. So I have a journal that I've created called the Lim Journ. It's specific for my eliminations. And I need to go ahead and choose that journal name. Now the next step is to go up to the lines. And when you're in the elimination rule lines, you have really two methods. You can do the net change method, which just checks the net change between the accounts and eliminates that amount. Or you can do a fixed amount. So maybe, you know, every month I want to eliminate, you know, 1,542 euros. So you can do that fixed amount or that net change amount. I would say, again, most frequently we see net change, but there's definitely good scenarios for fixed. You have to choose your source account. So if you have just a range of intercompany accounts, you want to go ahead and select that range. If you wanted to look across all accounts, in my example, because I would maybe be using that trading partner instead, I just can use the asterisk. And that's going to say look across all accounts, because I'm going to define later that I only want it to do it for my dimension. So you have a couple of flexibility there, a little bit of flexibility. You can choose whether to use the source account or a specified account for the destination. If you choose user specified, you just pick what destination account it's going to go to. I'm just going to use my source account as that posting, so I'm going to leave it as source. Again, same with the dimensions. If I wanted to post the same ones that I get from the source, I'll choose that. If I want it to go to specific ones, maybe I have another special handling, you can do user specified. But I would say source is probably what we see most frequently. Now, in my source criteria, this is where I can pick those financial dimensions, which is why I like to use a specific one for it. When I click on this drop-down, I can choose trading partner. And this is where I can define, in this example, I did 2 companies for ease of use. I just wanted to look for across all accounts, anywhere where trading partner is either East or, in my case, USMF. So you can do some ranges, and you can do some other things in these windows to make it easier, but this kind of illustrates that I'm looking across all accounts, and I'm using my dimension to find the values, or I can use a range of accounts. Okay. So I already had this one created down here, this intercompany one, same way that I just set this one up. earlier. So it's already set to active. The same set of lines, I'm going to use net change, and I'm using that, trading partner. I should probably change that to be east. And I'm going to go ahead and run this for my proposal. So when you go to the consolidations menu, you'll notice there's this elimination journal. Now this journal, if in that consolidation process, if you chose proposal only, when you're done running the consolidation, you'll actually see the journal here, and you can review it and post it. If you chose post during that process, then you would actually see it only on your posted, not your not posted. So this is a previously one that I'm going to run. Or you can actually run the proposal from here. So there's a lot of options. So I'm going to create a new journal. I'm going to go ahead and choose that elimination journal. I'm going to go to the lines. And under proposals, you'll see there's an elimination proposal. And you'll see here's where I'm going to make those different selections. So my source company, I'm going to have it post within this company. I could choose another elimination company if I wanted that for separate handling. And then here's those rules. So the one that I created earlier, which I'm going to use, and then the one I created today for the demo. But I'm going to use the one I created last night in our company. And again, you're going to pick the ranges that it's going to look across. I'm just going to do the whole month. And I'm going to have it post at the end of the month. You can pick your posting date. And then if you want to pick some reason codes or a release date or put any comments, you can certainly do that. Okay. So now when I click OK, it's going to process. It's going to look across the rule that I set up, and it's going to come back with the lines. And you can see that across all my accounts, here's that USMF and East. And here are the different debits and credits, and that's my proposal. I can't edit this, so it's only good for reviewing it and posting it. And again, to be honest, this is where when you get into some multi-currency situations, it falls down. If you try to post it, it gets a little off balance due to currency translation. This is a big struggle here. We do want to try to fix that going forward. There's kind of two ways to get around it. I don't love either of them, to be brutally honest. But sometimes what we have to have customers do is run it when there's translation, kind of get the differences. So they use the net change method. They run this. They kind of track it. They delete it, and then go create a fixed elimination to handle it. It's kind of ugly and manual. We know it's a big issue. The other option to get around, if the rounding difference isn't too high, there is a parameter in general ledger parameters, I believe, where you can change that rounding threshold. But again, you have to take that into consideration. You don't want like a $10,000 rounding difference. That's a little excessive. But that is another way to get around it, where it will actually just put that difference due to currency translation in that account. So those are two ways to get around it. They're not ideal. It's not a great solution with heavy currency translation, but those are our two options. So if I was okay, I could go ahead and post this, and then I would have my eliminations posted. So that is the consolidations in Dynamics. Mm-hmm. I'll show you what the question was, when you go to consolidation transactions, is there any way to see really where it came from? So you'll notice, first of all, when this is the consolidation I ran, March 2017. So first of all, you already have to go within each company. So if you have 100 companies here, you're going to have 100 different ones you have to look at, which is where financial reporting kind of allows you to view all companies in one. When you go to actuals, this is all the information you really get. The balance by day by account. It's all in that currency. What's that? You don't have a voucher to trace it back You do not have a voucher to trace it back because it's consolidated. The balance is by account by day. Yep. So that's the level it brings it across the consolidation. We definitely want to enhance consolidations in the future. That would be something we could certainly look at.
So if this is a multi-currency consolidation, it also means that you have to do the currency revaluation of balances.
Yes, you do need to do the currency revaluation still in the consolidated company. We actually have a really good wiki that actually shows you how that, when that changes across the different months, how that calculates. So if that's something you'd like. If you just type consolidations at our wiki, you'll see currency revaluation and consolidation company. We have some good examples there. But yes, you still have to run that. All right, so now I'm going to focus on our doing consolidations of multiple companies. I'm going to talk about our soft consolidation options. And when we do oh, I already covered that slide, sorry. No, I didn't. I think I already covered all of this during the company. Sorry, I forgot some slides. But what I showed you was how to process the intercompany eliminations. We touched a little bit on the consolidation account groups. On the currency translation tab is where you do the currency translation adjustments, and then choosing your financial dimensions and your ownership. So those are some of the capabilities with the online. So now we're going to move on to financial reporting or soft consolidations. You can do quite a few things with the financial reporting consolidation. It's a soft consolidation, meaning just the eliminations aren't posted unless you use an elimination company. We can do things such as basic chart of accounts in same fiscal periods. We can use organization hierarchies to kind of get that aggregated consolidation. We can handle eliminations and multi-GAAP. We'll cover all of that. But if you do have multiple chart of accounts, different fiscal periods, or minority ownership, the tool can still handle those situations as well. And I'm actually going to touch on the top two today, the different chart of accounts and minority ownership. And then there's a bit more functionality with the currency translation as well. We have rate types assigned, and it'll actually allow you to use multiple reporting currencies. So I'm going to cover that so you can really kind of see the full picture. And we're going to take it in phases. We're going to start very basic, and then I'm going to kind of build on it. So if you have a scenario of consolidating companies with the same chart of accounts, the same fiscal periods, it's really easy. All you have to do is create a reporting tree. So this will be one of the shortest demos you've probably seen. I am in the Financial Report Designer. So there was a session earlier if you're not familiar with this. And we have a concept called reporting trees. And when we have reporting trees, again, we have two types. We have the organization hierarchies that come through from operations. They're read-only, they're date-effective, so you can certainly use one of those. Or you can create your own reporting tree. So let's create a new one. And when you create a new one and you double-click on this first column, Company A, these are all the different companies that I have in operations. So I'm going to choose USMF. And of course, I already have this created. And I'm going to choose my East company, the same things that I just consolidated online. Of course, I can give it nice names and so on. And you can see this structure start to build over in this graphical area here. And this is where I can have all 80, 100 companies. I can have different roll-ups and aggregations. And it's just as simple as creating a reporting tree, putting that on a profit and loss, and now I have a financial reporting soft consolidation. Very basic. It's going to use the chart of accounts defined or the categories defined in the row definition. I have full drill down to transaction level detail, which I'll show you in a little bit. But that's all we really have to do is create a reporting tree. Very easy, very basic. That's not too much excitement for a demo, so let's go into something more complex. Let's talk about multi-GAAP. What if we have to do an IFRS and I have a US GAAP, or you have different GAAPs? So we do have the posting layers in operations. They are used for adjustments only. And all of those posting layers, there's up to, I believe, 10 now that come with operations. You can obviously add more very easily. All come across into financial reporting. And so you can just pick those posting layers in the columns or the rows and do your different types of gap reporting. So let's go back here. All right, I already have a report called a basic consolidation with multi-gap. So for this scenario, I am still going to go forward with the example of the same chart of accounts, same fiscal periods, very vanilla type of consolidation. So let's look at this report. I'm going to do a balance sheet. So I have a balance sheet. In my example, I'm just using the default one, so it's based off main account category. Of course, you can have it based off accounts, but nothing special about this report. It's just a standard row definition based off my account category. Okay, I'm going to jump to the tree. I am going to use slightly different companies for this demo just because of data. So you might see a few different companies in my reporting tree that I created just because of demo data. But again, that same reporting tree I created, I'm just using 2 different companies. So I'm going to consolidate my Contoso Entertainment, my Contoso Retail. Okay, so I created a tree, multi-company. What I just showed you, just 2 different companies. Now, in the column definition, for the purpose of the demo, I have kind of 2 side-by-side views. So as soon as it opens up, I'm not sure why it's being slow. There we go. Let's talk about, I have 2 sections. I created this US GAAP one, and I created an IFRS one. So my US GAAP, I've got just a standard year-to-date column for my USMF company and for my USRT company, which is my retail company. How I'm getting that side-by-side look is I'm actually pointing to my reporting tree, and I just picked the company from the reporting tree because maybe I just wanted it side-by-side. So that's how I'm getting this side-by-side view on this one. I'm adding the 2 together. But for IFRS, it's actually, I have to define the posting layer. So by default, if you don't define a posting layer, it's going to use the operations one, which is the out-of-the-box one. But in my example, I have posted some adjustments to be IFRS compliant using my posting layer current and tax. So what I've done in this example, I've used the attribute, and it's going to use the current layer and the tax layer so that I can get that IFRS reporting. Now, we know that there's desire for more automatic handling of this within our system, but for now, it's just a manual adjustment posting, and then using those posting layers to bring that into the financial reporting. And so when we go ahead and generate this report, okay, I've got this side-by-side, so I've got my comparisons of my different gaps. Here's my USMF company, my retail company, my total for both the different types of gaps. You can see the reporting tree up here if you'd like, but we have them side-by-side, so it's not quite as useful. And I have the full drill-down capabilities on each of these. So I can drill down depending on the level that I chose in the report. And as I drill down, I can see the balances broken out, and I can continue to drill all the way back to whatever level I chose. So kind of some ugly data, but okay. So that's kind of a side-by-side multi-company using posting layers to get more of a multi-gap type look. Yes?
Regarding the financial reporting, are you planning to change the consolidation of the detail? Because I get a lot of complaints from my customers that when you go to the detail, you have the whole the combination of accounts and other dimensions, and they maybe want to see only the account first, and then maybe double.
So just so I understand, so when you see, because you see all the account dimension combinations, so there's two things there. There is a financial reporting setup form where you can pick what dimensions come across into the data mart that are available for reporting. That is available. It's on the general ledger menu. Reintroduce that 7.1, the fall release. Are you on RTW? Yeah, I think so. Okay, so yeah, it's available with the fall release. So that's where you can pick the dimensions. You still can't pick dimensions per report, but you can pick which ones go into the data mart that are available. And then the other thing is they're still showing a combined string here, but if you do export to Excel now, the default is separate columns in Excel. Yeah. Mm-hmm. But yeah, you can restrict those now with the latest release. So. But we still we know that people will actually want to by report because their balance sheet they only want a couple of dimensions versus their P&Ls and so on. So that's a pretty common feature request. Yes? Can you see what posting layers the transactions come from? Let me see if that is an attribute. I do not know why that's so slow. Yes. If you add this attribute column, and you choose posting layer, when you drill down, it'll tell you what posting layer that came from. All right, now let's talk about eliminations in financial reporting. You can do eliminations in either the column definition or the row. And again, based on how you've set up your general ledger to handle eliminations, again, I was using Trading Partner. Today I'm going to show you where I have specific accounts for intercompany accounts. You can just use either one and use those in the row or the column. So I'm going to show you in this example multiple companies in the reporting tree. We're going to have dimension filters in the column definition. And then we're going to do calculated columns so that you can see the total, and then the eliminations, and then the consolidated amount with the eliminations. So let me first show you the generated report. So, and then we'll walk backwards and see how we did it. Okay, so for this example, I went with a side-by-side again. Again, you have a lot of flexibility here. I used 3 companies. I did USMF, USRT, and DEMF. So these are the full consolidated or full amounts for each company individually in each column. And then I took a total and added them together. I decided to do a separate column for elimination, so I'll show you how I did that. And then I just took a consolidated total with eliminations. So I took the total minus eliminations to get that amount. So I just kind of spelled it out so that you can kind of see how we step through the process and where those amounts are coming from. So how did we do this report? We have a tree with these 3 companies in them. I'll show you that. And then I actually used accounts this time for eliminations. So my reporting tree, I actually have 4 companies in it. One happened to not have any data. Nothing special with the reporting tree, just I defined my different companies. The row definition, same thing. It's just a summary income statement. It's very vanilla, just using my accounts or account categories. So very, very basic row definition. Nothing special there. All the work in this example is going to come in the column definition. All right, so very similar to the last report, I went with a side-by-side format. So I used this reporting unit to restrict from the reporting tree. I believe it's, I can't remember which one it is, this one I think. Nope. I picked this reporting tree and I just picked each unit and went side-by-side with each of my companies. Okay. And then I added a calculation column to add them together. I then have columns F, G, and H used for my eliminations. So again, you'll notice I still restricted them to each company. And I used the main account to bring in the intercompany accounts. So if I had used that trading partner I did earlier, I could use a dimension or I could use an account. So again, however you set up your system to handle it, you can just bring that into that row or column. These are only my intercompany accounts between these different companies, so that's what I want to bring into those columns. So I did that for each one of my companies. And then I actually didn't care about seeing them individually, so you'll notice I made them non-printing, which is why you didn't see them on that generated report. Okay. I then just went ahead and added it together and then did a simple calculation to subtract them. And that's how we got this elimination report here. So we have had people want to do that in the row definition as well. It's the same experience in the row definition. So we're just using the reporting to kind of pull in some of the configurations and still get you those aggregations and consolidations. We're just having a reporting tool kind of surface that for you so you can see that full drill down. So again, additional ways to do eliminations. You can do it in the row definition, or we have had people create that elimination company and actually just bring that elimination company into the column definition and then subtract out that company as well, or put it in the tree. So the options are really endless. It's just kind of about knowing the tool and what you can do with it to really make it work for you. All right, we're going to go through like 3 more examples. I know this is a lot, but we're just hopefully building on each concept so you can learn. The next thing I want to do is consolidate with multiple chart of accounts. This is really easy to do in financial reporting. In the row definition, I'm going to show you how you can have a separate link for each unique chart of accounts. And it really becomes a mapping exercise similar to with the consolidation account groups. You know, cash is 1,000 in this company. Maybe it's 2,500 in this company. So you just really map that in your row definition. And then what we'll do is we'll actually select which chart of accounts or row you're going to use for each company when you consolidate it. So again, I'm going to start with the final solution and walk backwards. So let's go to the chart of accounts consolidation. I'm not going to do a side-by-side this time. We're going to just do a standard consolidated, very basic report. I guess I am going to do a side-by-side. Did I grab the right report? I did. Yep, I did. I lied. We're going to do a side-by-side one. All right, so this is a USMF, DMF with different chart of accounts. Again, same side-by-side data. You'll notice you don't see the account anywhere on here. So how do we do this particular report? Let's start with the row definition, which is where you just kind of do that work one time only. So for those of you that use financial reporting, you're probably used to just seeing one link to financial dimensions. If you double-click on the header or you go under Edit, Row Links, it will open up this Row Links window. And you can create as many of these links to financial dimensions as you want. And the goal when you're doing a chart of accounts consolidation is you want one link for each chart of accounts. So not per company, but chart of accounts. Because you might have 10 companies that use the standard, and then maybe you have one French company that has their own statutory account, maybe one Brazilian company. So you want a link for each unique chart of accounts. I usually recommend giving them a nice description because you are going to have to select them later. So maybe name it by company or by chart of account, depending how you set this up. And you'll see later when I have to select this in the tree how it makes it very easy to match it. So I've created 2 links, and now it's just that mapping exercise. Here's my sales line. And for one chart of accounts, I have my main accounts of 401-100 through 402-100. In a different company, it's 401-100 through 401-190. Okay? It could be, 5,000. It can be as different as, night and day. And you just kind of map what maps to sales on each single line. My column, basic, side-by-side, haven't done anything special really with this particular column. All the work comes in the row and the reporting tree. So in the reporting tree, again, you have to define your different companies. So I have 2 companies in this example, USMF and DEMF. So I've defined my companies. But you have to say which company uses what chart of accounts. So what you need to do, there's an extra step, is you need to choose the row definition. So this is where this row definition is very specific to this scenario. It's probably maybe not as reusable as others. So I've picked that row definition. And then for each detailed unit of the tree, this is that name that I gave that link to financial dimensions. So what I'm saying is for USMF, look to that row, that link to financial dimensions, and use the accounts from that link. For my DEMF company, look to that second column, and that's where I get my account references. So you're just kind of mapping them to each other. And then the last step is you have to click this checkbox. It's a little tip. This will actually say, instead of going to the row definition and using the first column, go to the tree and kind of get the mapping from the tree, and that's how it's going to consolidate it and bring it all together, and that's where you'll get this final report. Okay. All right, so we're building on concepts here. All right, minority interest. And then I'll talk about currency translation. So you can do minority interest a couple different ways with financial reporting. We get a lot of requests where people want to specifically see that minority interest on a special line. And so we're going to use an advanced calculation in this example. So if you're not used to financial reporting, you might get a little deer in headlights look, and that's okay. If you're used financial reporting a lot, this will make a lot more sense to you. So let's go ahead and look at minority interest. So the only thing I'm going to talk about, and whoops, that's not what I wanted to do. There we go. Again, I'm going to start from the final product and work backwards. All right, this is the same financial statement I showed you earlier, but I didn't scroll down because I wanted to save it for later. This is my different companies, the total, the eliminations. So you saw that. Down to my net income line. Now, the one company is, we have, I think it's like 10%, I can't remember what the interest I have set up, but we want to see that minority interest on its specific line. So this is that non-controlling interest line. But I don't want that calculation to apply to every other company, which I fully own. So I'm going to go ahead and show you how I did that. I'm going to start with the reporting tree. So a very basic reporting tree. I showed you this earlier with my 4 different companies. Pay attention to this column B, which is the unit name. Okay, USMF, USRT, GLMF, and DEMF. Okay, that unit name is going to become very important because when we use a unit name, we actually use the top node of the tree, and then we use the little caret, and then the unit name. And that's how we know what line of the tree to look at. Okay, so how we do this minority calculation is in the row definition, we're going to use an if then else calculation. Okay, so everything else has been standard, but I want to get that only in a specific column, only for my USMF company, and I did use 10%. So what I did is I added a less non-controlling interest line. It's calculated. And what my formula is saying, so if at unit, so that at unit is saying point to the tree. That's just kind of the syntax of financial reporting. So it's saying if I'm in the summary USMF tree, that's the same thing you saw in the column. So I said that's that unit name that's important to pay attention. So only when I'm on that unit of the tree do I want to take column B, which is where I was bringing that company, that's full amount, and I want to take the value there times 10%. Okay? If it's any other unit of the tree, don't do anything, okay? Because it's only that company that I have that percentage. So that's where you get that if at unit, B equals the 1030 line, which is net income, times 10%. Otherwise, do nothing. Okay. Now, you notice I only wanted that calculation in a specific column. So what I did is I forced it into only columns E and J. So let's jump to the column definition so you can see that. So again, if at unit summary USMF, then take column B's net income line, which is 1030, times 10%, else don't do anything, and only put it in columns E and J. And when I run that, that's how I got to show this minority interest in only that total column and that eliminations column. So if you have customers that really want to call out that non-controlling interest, that's a nice way to do it. And if anybody wants any of these reports ever for samples, just send me an email, and it can be nice to reference some of these calculations. All right, you can do additional ways. You can always do some sort of calculation. And then in the reporting tree, we do have a roll-up percentage. This is a very basic way to do it. In our reporting trees, if you scroll to the right, you'll see this column H is roll-up percentage. If you just type in 10 in there, it's only going to roll up to the top level 10% of that value. So that unit itself will have 100%, but the roll-up aggregated amount will only roll up 10, 20%. So that's a very basic way to do it if you don't actually want to explicitly call out that line. But we get a lot of requests for specifically calling that line out. All right, fun stuff for a Wednesday afternoon. Trying to keep it exciting, but in the end, it's consolidations and calculations. There's not many jokes I can make. I apologize. All right, last topic, reporting currencies. So we talked about currency translation in operations. Again, we have a few more capabilities in reporting. Yep. The only thing you can really do is that ownership percent in the Consolidate Online form. That's because you can't post adjustments or anything like that. So I don't know if anyone's else found a more creative solution, but it's pretty limited. Yeah, it has its capabilities. It's not a broad, like some of the CPM solutions that handle full consolidations. There's some work that definitely needs to happen there. Could you repeat that, and I'll try to share that with the audience? How have you done it? The question was how you do the minority interest in the Consolidate Online. And the only way we really have out of the box is to do the ownership percent. You had a solution that, can I share with everyone? What was it? I couldn't hear you.
Yes. You can create corrections on off-balance accounts in subsidiary account companies, and then use the consolidation account to translate them to an imbalance account on consolidation level.
Okay, so you had special accounts for handling that you consolidated to a special account in the consolidation company. Okay, for handling it. So it's using different accounts to handle some of it. So. Okay, so financial reporting has the ability to have unlimited reporting currencies. So you probably saw, if anyone went to Christie's session earlier today, I guess I was in that session too, our session, you'll notice on any financial report you have the ability to pick currency in the drop-down, and then you can choose any one of the currencies that you have set up in your system. So how does this translation actually happen? So if I wanted to actually switch this report to euros, I just click on euros. It's going to run the translation process. You'll notice my currency symbol changes, and now I'm seeing this report in euros. How this is actually working, it goes back to the main accounts. So in the general ledger, on each main account, we have two fields that are used for financial reporting. I'm going to put this in edit mode. So you'll actually see a financial reporting fast tab. There's two fields. There's a financial reporting exchange rate drop down. So this is that exchange rate table where you define your pairs, euro to British pounds, US dollars to euros to Canadian, and your rates. So that's just picking that table is all it's doing. It's the translation type that really kind of drives what that exchange rate will be. We have 4 different translation types. Weighted average and average are most commonly used for our profit and loss accounts. Just 2 different ways for calculating average based on your preference. Current is going to be that spot or month end rate. That's going to be used for most of your asset accounts, liability accounts. And then transaction date, same terminology we use for Consolidate Online. That's going to be used most likely for your fixed asset accounts. How that one's going to work is it's going to go back to the acquisition date of the asset and use that to get the exchange rate. If there's not an acquisition date, then it'll look to the transaction date. So that's something that was added in 2012. R3 or CU7, I can't remember. There was a version. I have a blog on it. And it carried forward to operations. So if you're in older versions, you might not have that. But the acquisition date was carried forward so that we get that correct translation. When you pick a currency in financial reporting, it's going to each main account, getting the rules that you've defined, getting the exchange rate, and translating it. And what we have the ability to do is pick any currency then, as long as you have, of course, the exchange rates and everything set up. And that's what allows us to do more reporting currencies than what you can do in the Consolidate Online. Okay? So this will translate the whole report to that currency. Some people would like to see that side by side. Let me just create a quick column definition here. Some people want to see it side by side. One second. Let me just show this and then I'll ask you your question. Let me just create one really quick. Let's just say I want to see a comparison of US dollars versus euros. You can also use the currency display field. This will also have all the different currencies in it. So I could pick US dollars and I want to see euros. And then those columns will always be hard-coded to those currencies. And if you want to do comparisons or you just want side by side, you can pick each currency in a column. So the viewer will automatically translate the whole report. If you hard-code it on the column, it'll just show you that column always in that currency. If you use any auto text fields, we have currency symbol that will automatically pull currency code. So we do have those same auto text fields that you can add to your headers and your report that will also change based on that currency. Okay. Go ahead, sir. What was your question? The currency differences with the translation differences? Yeah. It's not great how it works. Let me show you a balance sheet. With financial reporting, it's more of like a plugged value. Let me show you the balance sheet. I'd love to change this someday. I think I have one in default. I'll just show you the default one. When you have the differences, especially on the balance sheet, in the row definition, the only way to really do it is there is this, we call it a rounding adjustment, but it's really for a currency translation adjustment. It's a plugged number. So what it does is you have to pick what row you want that difference to go into. So this is actually the row from this report. You pick your total assets row, your total liabilities row, and then if you kind of have a threshold. So it's basically what it'll do is when it processes it, if it's under this threshold, it'll go ahead and run the report. If it's over that threshold, it gives you a bunch of warnings that's saying, hey, your translation is so off, you're over your threshold, and it'll actually tell you that. And then when the report is done processing, you can drill down and you can see that balance adjustment on this row itself. So this 2080, so I picked, where is it? I put it into this other current liabilities line. So you pick the row and then you drill down and you can see the adjustment on that row. So that's how it handles it in this case. So. Yep. All right, so that is a lot of the different ways you can do currencies. I showed you it in the column definition. Again, we try to cover a lot of options today. Maybe too many, maybe too few, but hopefully you see what AX can do, what operations can do using hard or soft. I will get with both of you guys in a minute. Again, the takeaway is to try to find the solution that works for you. We are aware of some of the limitations. It is stuff we would like to do someday. It's not coming in spring. We don't have enhancements and consolidation for spring, but it is something on our, and it's at probably our backlog, top 10, 15 things we do want to do to the product to improve some things with currency, minority interest, eliminations, and so on. So with that, I know there's a couple questions. Here's Christy and my information. If you do ever have questions or feedback, we love to hear it. And I'll use the rest of the time for any questions that you might have. So I know there's two in the back. Yes. If you do not have those two fields populated, if we can't find an exchange rate, we'll just use one. So if we can't find one, we're essentially not translating. Yep. $100, it'll just show 100 because we don't have anything to. Yep, if we can't find something, yeah. So those fields you do need to have those fields populated if you can't find them. Yep. I think there was one other question I said I would get to you. Oh, I thought someone else raised their hand. Okay. Yes?
Can you, because I haven't used either of the products, what do you find most of your clients using? Like, is there a preference by industry? I mean, is it just personal preference over the soft and the hard?
Yep.
The hard is kind of how we do it now, where we have a company, we bring in the net changes.
Yep.
They do all the, and then we do the, we go and put all the rates in. And we run, we do it all, it's all manual for all 27 companies. But, just looking at it from here, I'm trying to see if there's an advantage of doing it one over the other. I kind of like the soft one.
Yeah. So the question is, what do we see customers doing? Does it kind of vary by industry, preference? We see customers doing three things, 100% by preference. We've seen a lot of people move to the soft consolidations if their auditors and them are okay with it. Just because they get the transaction. Some auditors really want hard consolidations. So it kind of comes down to that accounting finance team, their auditors, what they prefer. We see a lot of people use a Consolidate Online because they want hard consolidations. And then the third option, we do see a fair amount of our big global currency customers using an alternative solution. So because we have the shortcomings that I tried to call out, because I do want you just to be very aware of. And when things get really, really big and you have those multiple levels, we've had to have people use another solution because it just became a little bit too manually intensive to do it here. But we really have a split. I mean, we talk to people that are like, we ditched hard consolidations when all is soft. And we have people say, we really need those hard consolidations, will never change. And then there's times we just recommend. They've got 300 companies and 20 currencies and so many eliminations. And at some point, we just say you might want to look at using another tool until we make it better. So I have hybrid, and then or a hybrid. Yeah, they might use
elimination company.
Yeah.
And then pull that in for the soft consolidation.
Yeah, or they'll use financial reporting with just a company. I receive. Yeah, that's very common. Yeah. So, yeah, I don't have a straight answer. We have a big mix just depending on each customer's needs. So, and that's how Christy and I will talk about it with them is here are your options. We'll tell you when it might not work great, and that's what we have people doing. So, but we do, we've been doing this session quite a bit. We have had probably more people move to the soft consolidations just because it's easy for them to manage and drill down and do some of that stuff. So we've had a lot of people maybe transition there more, I would say, in the past.
If
but
they wanted to see the eliminations, they're right there. They can drill down to it on the report.
They can. Yep. Right. you can always drill down and completely see them. So,
The
yeah.
other issue customer
Mhm.
brought to me last month, and is that for management reporter in how do we call it now? Financial. Yeah.
We know what you mean. We do the same thing. I called it AX earlier, so
So,
tomato, tomato.
yeah. With management reporter, you can set, as you show, the exchange rate for each, the type of exchange rate for each account. And then if you are using BI, you won't have the same setup for the numbers. So what they told me is we need the people to see the same number regardless of the tool.
Mhm.
And that's what I say, oh, okay, I don't know.
Yeah. So the question was, they're using another BI tool,
So
and they want to see the same numbers between financial.
inside the AX as well, but it's
Oh, inside of AX.
the Power BI. It's
Oh, Power BI. Yes.
It's not the same setup for
It's not. You're right. The translation currency stuff is not the same between Power BI. I think it just does the system currency.
What Power BI uses is there's a system currency that you have to define, and that's because your Power BI could be across multiple legal entities, and we need one common currency. And you're right, it doesn't use any of the settings, exchange rates on the main account. It just translates it all using whatever date and goes and finds an exchange rate.
Yeah. So yep, there's definitely some.
compare and this
Yep.
if I go, because we are going to consolidate with using the online.
Mhm.
So if they want to go to the transaction. So I told them, well, I don't know, we can do something with BI.
Mhm.
They told me, yeah, but BI has another exchange rate, so we cannot compare.
Yep.
Yeah.
So go ahead, and then I have just a survey question at the end.
Yeah, I was just going to say, Power BI, I mean, this is actually one of the big pieces of feedback we've provided the BI framework team, is that, we need to be able to see this in the accounting currency. I mean, so not just system, but if I do drill down to a specific legal entity, I want to see the numbers in that legal entity's accounting currency, not in the system currency. But you're absolutely right. It's Power BI does not have business logic behind it. They're not going to translate these numbers for you. It has to be all in a database somewhere. And if it's not in the database, we don't report on it. So Power BI has its time and its place to be used. Accounting, reporting on financial statements is really not, it's not designed for that, at least not yet. We're pushing things, and I don't know if it ever will be, but.
Yeah. My kind of question on those lines is, because Power BI doesn't have that business logic, I don't ever see it being a tool that does that. Probably putting that we need to do this translation before we push it out to this entity store. How many reporting currencies do you guys think we will need to do that? Obviously, MR can do it on the fly, so we can do 20, 30, 40 reporting currencies. If we're doing this processing before we publish the entity store, I'm not saying that's how we'll do it, but it might be. Doing 40 currencies could be a heavy time. If we had to limit it, what do you guys think a good number of reporting currencies would be? Based on all your customers, your own organization, your customer base?
Or is the answer you can't limit it?
Yeah.
We need to know that.
You can't limit it. Okay.
We have a customer that has 25 currencies.
Okay.
Yeah.
If you want to go to the transaction, then you need.
Yep.
all the-
Yeah.
When has 25 for territory, but do you really report on in all 25 and it's hard to mention?
When they start covering exposure at every market, especially in trading companies.
Then they want to see the
Then they want to
exposure for
see it.
all of it. Okay. Yeah, because we are pushing on, we're working with together those teams. We shouldn't say pushing. We're all one team. But we need to figure out this solution, and so.
A problem in the report is also if I consolidate every month, I have my average, I have my historical, etc. Rates, and over the months, my average is of course also going to change, but January stays as it was in January.
Yep.
It doesn't get new or other evaluated just because we have March. And as far as I see it, management reporter or what it's called now cannot do that. It always gives me those 4 types average.
It always gives you, so the question was on how your averages change across the different months. Actually, how it works is, let's just say you have a year-to-date column and you have average as your type. It will do January's at January's average, February at February's average, March at March's average, April at April's average, and then bring them together. So that's how it actually works in financial reporting. So if you have a quarterly, it's January, February, March brought together. So you could actually separate each column and hard code the periods, and then do 1 for 1 to 3, add them, and you'll get the exact same results. So it will do January at January's average.
Can you say something about what plan to do with consolidation? Because what I saw today is actually what I see in 2012.
Correct. So the question is, what is our plan for consolidation? And what you see today is what you see in 2012. It has not changed at all between operations and 2012. It's the exact same. I don't even know if it might have been touched like a tiny bit since 2009. It's the same as when I took over GL, and now Christy owns GL, and I'm pretty sure it hasn't changed for either of us. So it's one of those things. It's on our backlog. We want to do simple things first. I mean, just even as simple as editing those elimination journals when you start dealing with translation differences would make a big difference. You know, we want to bring org hierarchies in there. We want to handle it a lot better. I mean, so we want to enhance it drastically. It is a huge area of feedback, but we don't know what we're going to do yet because we haven't started working on it. But it's another one of those areas when we do, we'll be reaching out to all our global companies that have this need and get their feedback and plug it off bit by bit. So,
Just kind of putting it back to the group, what do you want to
yeah, what would you like to see? What are your top things we could add to just make it more robust?
We communicate that because mail doesn't really seem
Yeah, how you communicate.
everything can mail.
Yep. So I'll kind of tell you a little bit about how we prioritize what we're working on. Number one is if Shri tells us to do something, we do something. No, top down, you know, there's things we have to do. But how we prioritize our work in other areas besides just sometimes we have to do technical stuff or what leadership tells us is we go to conferences, we hear tons of feedback. What's the most common request? Christy and I are on calls daily with customers that are live, going live. We get in sales calls. We get in RFPs. So we use that as a point of reference. We also used to have a Connect site that we would track suggestions on. I think they're going to be rolling out a new method for that for operations. I'm not sure if that's live yet. It's going to be... Yeah, so there's a new one coming that will track for operations. They haven't rolled it out yet, a new way to also that. We have a customer advisory board that Christy runs. It's kind of we have a customer council and we have a customer advisory board. The council is kind of a broad group of people that have said, we want to provide feedback when you talk about areas we're interested in. So they've signed input agreements and NDAs. And let's say we're working on consolidations. We'll email this group of people that have committed to providing feedback and say, hey, we're going to start working on this. We want your feedback. And they can weigh in. Or we'll do surveys with them. Rate your top 20 features, and we'll add that. And then we have an advisory board, which is a more condensed strategic group of people that, and Christy can talk a little bit about it, but 5 to 10 people in a specific area, GL, budgeting, collections, accounts payable. And we work with them. We have meetings periodically where we say, okay, what's going on in the industry? What are you seeing? What do your companies need? And we do a little bit more strategic planning with them. So we have 10 plus point of references that we use to kind of drive what our priorities are. There's always legal things we have to do. So that's kind of how we drive our backlog of what we're working on next. So all of those ways are ways you can communicate with us like you're doing now, emails, all those areas. So we look at a lot of point of reference to kind of drive that. So yeah, when you email us, it goes a long way actually. And we communicate that up and down with our groups on here's what's really important to customers. And I would say in the last month, consolidations has come up a ton on customer issues. So we know we'll definitely be bringing that up in our next planning groups. So.
And just to reiterate on the suggestion database, people think we don't look at it. We look at
Really?
it all the time.
Yep, I would say weekly.
Because that gives us, and again, I think Shelley is actually going to be rolling a new one out to partners and customers, but we take very seriously the number of votes on those suggestions, because that really gives us a pulse on, is one customer asking for it or 50 customers asking for it?
Does it still exist?
Yeah, we still have access to all the historical suggestion
Yeah.
databases. There's a new one coming out though.
But the old one,
The old one is,
Yep.
you probably can't maybe
Yeah.
see it, but we can see it.
Yeah.
So, I mean, I have a spreadsheet literally for GL where I have every suggestion with the number of votes, because that helps me prioritize what I'm
Yeah.
going to work on next.
Yep.
And then I say, okay, I also was on 5 calls last month that had the same problems
Yeah.
as that suggestion.
Yep.
We're going after that
Yeah.
suggestion.
Yeah.
So,
So re-listen, redo. Like anything, it's resource.
yeah.
We kind of have to
resource restricted.
pick where we're, focusing on next, but that's how we kind of decide.
For partners in the room, make sure your customers are voting for these suggestions.
Yep.
That's very important to us.
Yep.
We need to know how many people are asking for it.
Yep.
It's hard to sell a feature when there's only 5 votes on it.
Yep. Yeah. Yes, thank you. Please let us know if you have questions. We are. Yeah. Thank you for being here. It was such an exciting topic for the end of the conference. We saved the best for last. But we really appreciate it. Again, share your feedback with us. When you have questions, reach out. We love to hear from you. So safe travels for those of you traveling home.
Thank you.
Thank you.